According to Statista, worldwide spending online is expected to reach $4.32 trillion in 2025. That's expected to continue growing by a compounded annual growth rate of at least 8% between 2025 and 2029, resulting in nearly $6 trillion in online sales by 2029. So in that regard, e-commerce companies are very attractive to me. And in this video, I'm going to compare three of the largest or three of the most prominent e-commerce companies from different parts of the world: Amazon, Alibaba, and Mercadolibre, and try and determine which one I feel is the best stock to buy for long-term investors to capitalize on this incredible growth in online shopping. So like I mentioned in the introduction of the video, e-commerce spending worldwide is an absolute massive market. 4.3 trillion in 2025, forecast to grow to 5.9 trillion by 2029. And underlying that growth is a fundamental advantage. Shopping online is incredibly more convenient than shopping in person, and that's never going to change anymore. The direction it's moving will continue to favor e-commerce because you can shop online and you can comparison shop, you can visit 10 stores in a matter of 10 minutes, whereas if you were to shop in person, you couldn't visit 10 stores in a single day, most likely, unless they're all packed in the same shopping center. Furthermore, they'll deliver all of the items to your doorstep. Most of the online companies will deliver the items to your doorstep for free, for the same price that you would have to pay if you would go and shop for the item in person. So why spend the time and effort to drive to your local store when you can shop online and have the items delivered in person? So three e-commerce companies that I've been following for several years are Alibaba, Amazon, and Mercadolibre. Alibaba, of course, operating in China and regions around China. Amazon, of course, operating primarily in the United States, but also internationally, and Mercadolibre primarily operating in Latin America. Of course, growth in the United States is going to be slower than growth in outside countries because that market is more mature. But surprisingly, the share of shopping online is larger in China than it is in the United States. The Chinese economy is more advanced in tech, and the consumers are more tech savvy than in the United States. The Latin American economy is growing much faster than the US economy.
Click the link below to watch the full video.